Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Tuesday, July 16th, 2013. Thank you all for tuning in. Let's jump right into the charts here. We're going to start off with the usual S&P 500 E-mini futures. The futures are trading lower by 1.5 to $1,676 per contract. Again, little down-ticking at the moment, but really nothing more than a flat market for the most part. You can see the little roller coaster ride that we've had here really overnight, and markets are basically in the same spot. So we're not going to make too much out of this open today. Yesterday was one of the lightest volume trading days of the year. I believe it was the second lightest trading day of the year. Very, very strange to see that, especially during a time where you have earnings, you have options expiration on Friday, you have Bernanke speaking on Wednesday, you have Fed governors coming out of the woodwork, speaking every single trading day. So very, very unusual to see that light volume, but it is what it is, and we'll just see how it all plays out going forward. One thing I do want to point out right now is that the markets, for the most part, don't seem to really care. They're just really in a sideways drift, and that's really what's happening at the moment. Let's take a look across the pond last night. What you're going to see here is that the Asian markets, for the most part, held steady. There was nothing terrible. There was nothing great. For the most part, you take a look at the Asian indexes. The Nikkei was up about 0.6%. The Shanghai was up 0.3%. The Hang Seng was flat. India was lower. India was lower. Let me just make sure that's correct. I believe India last night, lower by nearly 1%. So India was down. So we could watch for a little bit of weakness in the Indian ADRs if the U.S. markets are weak. That should be pretty important. The Nikkei was up, and let's just take a look at Singapore market, which is the Straits Times Index. That was lower by about 0.3%. So we're not going to make too much out of the Asian markets. Just watch for a little bit of weakness in the Indian ADRs if the U.S. markets somehow sell off. I'm not sure that that's going to happen right now, but it always can, and we want to be aware of it. Now, across the pond, a little bit of a different picture. You got some pressure across the pond, most notably in Spain. The IBEX 35 is down over 1% this morning. There seems to be problems with their prime minister over there. Looks like he's gotten caught in a little campaign scandal or something of that nature. What else is new from politicians? But either way, we'll see what happens there. Overall, the German DAX, which I believe is the most important index there, is down about 0.5% at the moment. The French CAC 40 is down about 0.6%. The FTSE 100, which is England, flat this morning, so no real change there. Just a flat market overall, and we'll see how that plays out going forward. Now, earnings are the big story here in the United States. I don't know if it will affect the major stock indexes, but it certainly will affect major names. The first stock that we look at here today is Goldman Sachs. Goldman reported earnings, got a super spike, and then the stock came back down to reality. Again, if you read into the numbers weren't that great, but the headline number sounds absolutely fabulous. We're not here to dissect numbers. We're just here to look at the pattern that it forms on the charts from the market's reaction. And right now, it's kind of nil. The stock yesterday closed at 163. Today, it's trading at 164.40, so it's not all that big of a move for Goldman Sachs, at least at the moment. You never know how the market's going to react once the opening bell rings and trading really gets underway. Right now, this is just pre-market activity and really somewhat muted for Goldman Sachs. Now, there are some movements. Johnson & Johnson is another stock that reported earnings. Stock is getting a good reaction to earnings. It's up a little bit. It closed at $90.40. Today, it's trading at $91.30. So, Johnson & Johnson, although I do believe it is overbought on all time frames, I would have to be very careful with it. But the stock is reacting well, at least initially, this morning before earnings. Coca-Cola is a stock out here that is getting hit pretty hard. The stock's trying to rebound a little bit in the pre-market. I will have Coca-Cola gap levels for you this morning. So I'll post those up on the chat room, in the chat room at around 9 a.m. But we do have Coca-Cola gap levels where we will be buyers of the stock at some point. So I'll post those up at 9 a.m. We do have about 4 or 5 gap plays out here today. So there's definitely some gap plays that are warranting some attention. Honeywell is in the news over the Boeing grounding of the Boeing Dreamliner planes. Right now, you can't make too much out of it. It's just a subtle little pullback. But this stock could be a little volatile today, so traders want to be aware of that. Honeywell could be volatile. It looks like they have a relay switch or something in one of the airplanes that Boeing makes that have been grounded, and that could cause some movement in the stock. Just a little while ago, CPI numbers were released. It looks like core CPI minus food and energy up 0.2%. U.S. Consumer Price Index rises 0.5% in the month of June. Gas index climbs 6.3% in June, but we don't count that, so don't worry about your gasoline prices. You're paying more at the pump. It really doesn't affect your life according to central bank metrics. But either way, that was out, and I don't think it's really a big market-moving event. Right now, the market cares about one thing, and it has cared about one thing only: how much liquidity is being thrown at it. Is there liquidity being thrown at this market? Is there liquidity being pumped into the market? And that's really the bottom line. The Fed seems to be backstopping the markets, and we have to realize that and understand it. And again, futures are only down about 1.5 at the moment. Looking at a couple of other things here, let's take a look at gold this morning. Gold is catching a bit higher, trading around $12.90 an ounce. That's up $7. If you take a look at the GLD, which is a good barometer for gold, you'll see that it's trading around 124.59. Yesterday, GLD closed at 124.18. So it's reflecting a nice little uptick in the market. Light sweet crude is higher as well today. Light sweet crude is higher by 53 cents to 106.88 a barrel. Let's take a look at the USO, which is a good proxy for light sweet crude. And this is now trading around 37.85. So ever so slowly but creeping higher almost every day. The conflict in the Middle East and Egypt is certainly keeping a premium built into crude oil. Also, it is the season where you do have storms and hurricanes and things of the such. So that also keeps a little premium built into oil. But either way you slice it or dice it, the market is trading higher today in the energy sector. Looking at the U.S. dollar index is down a few ticks today, down about 18.5 cents. We're not going to make too much out of it. Again, if the dollar goes down, that's a negative for the market, in my opinion. Unlike last year where the dollar went up, that was a negative for stocks. Today, the dollar goes up. That's a positive because it means the yen carry trade is well intact. And if you take a look at the dollar-yen chart today, what we will see here is that dollar-yen is a little bit on the weaker side. Notice the dollar-yen has fallen sharply, but it is catching a bid now. If this comes down, that could put pressure on the stock market. Okay? With that said, everybody, I'm going to leave it there. Short and sweet today. I want to wish you all a great trading day, and we will have some gap plays for you at 9 a.m. Come on over to the chat room. They'll be posted up there in a little while. Enjoy your trading day. We'll see you soon.